It's March 10th, 2014, current time 10:42 GMT. Jay Misley here from globalview.com with the daily Forex market update. Clocks in the U.S. have sprung ahead by 1 hour. Narrows the gap between U.S. and Europe and London by 1 hour and changes the market dynamic for the next 3 weeks. So keep that in mind when trading. I don't know about others, but that loss of an hour takes a couple of days to catch up, and I'm feeling it this morning. So anyway, and the market seems to be feeling it as well. So let's take a look at what's happened the last couple of days. You had two key events. You had the ECB meeting where, in typical fashion, Draghi and company have disappointed by not taking action to counter deflation. And in the U.S., non-farm payroll exceeded expectations. And we won't know what the real state of the economy is for months, but the market's assuming some snapback. And you should see some snapback in the data, but doesn't mean the economy is accelerating. So we'll see what the real underlying economy is, but it won't be so several months till the weather effects have played out. In any case, market expects the Fed to stay on tapering. So the dollar is gained against several currencies. Euro dollar is maintaining its bid, and euro sterling has been a highlight today, which as it continues to firm. We'll take a look at that in a second. Well, also, as you look at during the week, the Ukraine situation is simmering. As we're not really seeing too much risk aversion in the market as it plays out. But if nothing is resolved before the weekend and Crimea votes on secession on March 16th next weekend, it could become a factor. So we have to see how that plays out. Keep it in mind because this thing is simmering. The market's expecting some sort of a resolution, I suppose, but it's kind of a tinderbox and anything can happen. So you got to keep that in mind because it could affect the markets. If you look, let's start with euro sterling. That seems to be the focus right now of many. On a daily chart, the 100-day moving average is 83.28, and that's about where we are right now on spot. It broke both. If you take the longer trend line and you take the shorter one, that one was broken pretty decisively. This one is just kind of broken, but let's see where it is. It's around 83.15 versus 83.27 right now in the bid. So it was broken, but let's see if it gets broken decisively. The key level right here is around 83.50, and the flows in euro sterling have affected sterling, which is lower, and the euro dollar, which is maintaining a bid also versus the other currency crosses. Like the Aussie, the Canada, and so forth. The euro is getting the benefit of the doubt as after the ECB meeting, and the price action will tell you where the positioning was because obviously, at least in this pair here, market was caught short and staying short, and you can see what's happened here. We've gone up pretty hard. Now, if you look at the euro dollar daily chart. This was the uptrend line that was broken a couple weeks ago, and we have not really, two occasions we've traded back above it. We've not established above it, and now it's becoming a little further away, so we're going to take that off the chart. Similarly here, 138.94, we have now tested above it twice, though today with a lower high, and we have not closed above it. So that'd be a level to watch on the upside because that 140 is a sticky zone with 140 looming ahead. Downside is pretty obvious where the key level is. It was the post non-farm payroll low, which it's close enough that we'll make it 138.50, which is also my key 50 level. We break down below there, then the breakout level is 138.25. And obviously 138. And the upside, it's 139.25 is the key level. And as I said, a close above 138.94 would be significant. Now, this is a very light data week. After the first week of the month, when we have a slew of that data, it's a light number. We have some central bank meetings. Highlight being probably the Bank of New Zealand expected to raise rates, and you've already seen it the way the New Zealand dollar has been trading recently with that bid. Bank of Japan also meets, and expectations in there are probably no change here, but that there's a good chance of easing if the the consumption tax hike at the start of April is a drag on the economy. So we're in the second quarter or in the second half, market's expecting some sort of easing from the Bank of Japan, and that should hold up the dollar yen, barring some really blast of risk aversion. And even then, you'll find a bid probably below the market. Now, there's one more thought here. As I said, in the end, it's risk aversion, but it's also Japanese fiscal year end, and this is probably the quietest chatter of fiscal year end flows that I can remember. There used to be a real focus on where the flows are going, whether repatriations or outflows, and so far there's been very little mention of it. And normally at this time of year, that's the focus in Japan. So no one's really focusing on it, and it tends to be a factor, but but so far it hasn't been. So for today, still, light day-to-day extra hour with the U.S., and in the euro-dollar watch, I guess watch 138.50 to 139, and in the euro-sterling watch 83.28, which is the 100-day moving average, with 83.50 on top being a key resistance. Now, one more thing, by the way, if you look at the bottom of this page, you'll see bottom of this chart, you'll see a link. The link is to an article I've written called "Avoid Dumb Trades and Dumb Stops." It's really worth reading. It's something that's dear to my heart, actually, for trading. And if you want to get an edge and avoid seeing your account constantly dwindling on stupid trades, I suggest that you click on this link at the bottom of this chart, and you'll get access to this article. Good luck and good trading.